Let's focus on what's happening with the Lonmans, the Arcelormittals of the world. And I see Lonmin now is likely to receive approval to sell the base metals that it was ordered to stop producing last week. Those base metals, correct me if I'm wrong, the likes of nickel and copper. They were told to concentrate only on PGMs.
That's correct. I think Lonmin might have been caught on the wrong side of the law here, but that's not really the issue. The issue is, why isn't the DMR, why are they not communicating with these companies? It's sending out the wrong signals, we feel. It's very hard. You don't know any facts. This is just our reading of the situation. It sends out the wrong signals. It's in the benefit of everyone, the companies, the DMR, South Africa as a whole, foreign investors, that if these mining rights are coming up to be renewed, the companies should know by rights, and if they don't, the DMR should be communicating this with the companies.
And it follows on the back of the whole furore around Arcelormittal.
Exactly. And now yesterday we see Arcelormittal buying back Imperial Crown Trading for 800 million rand. They've essentially got 800 million rand for paying for an application fee for the mining rights. They don't even have the mining rights yet. We see this as, I'll go as far as to say, rent seeking. And it doesn't bode well for the international community, we don't think, at this stage. Greg,
do you agree with that? We need clarity from the Department of Minerals and Resources.
Yes, I fully agree. I think enough has been said on that Arcelormittal deal. If as a shareholder, I don't agree with them going that route. But I think at the end of the day, the courts will have to decide. But it hasn't covered South Africa in glory internationally.
Focusing on the copper price, it's down from the levels that we saw yesterday, but holding up above that $7,000 a ton level. And that, if you look at copper, I think we've had this discussion before, as Dr. Copper, that can still be seen as a lead indicator that perhaps things aren't as bad as they appear.
Well, you know, China this morning, the markets in Asia were down quite sharply when the Chinese growth figures came in, so everybody's expecting a slowdown. What they're probably not discounting is the fact that China will probably engineer a soft landing, but at the moment it's all panic stations. You would have expected copper to fall very sharply on that news, and in fact it didn't. So it leads me to conclude that the Chinese are continuing with their buying of industrial metals.
Group 5 came out with results yesterday, diluted headline earnings per share up 10%. What did you make of the results? Order book at 9.2 billion rand, that's at the end of this period. The order book at the end of 2009 was at about 11.6 billion. So a drop off in order book. But is it something to be concerned about? You are exposed at Cannon Asset Managers to Group 5? I
don't think it's something to be concerned about. The results were pleasing from our side. They came in within expectations. These companies, you know, we've been exposed to the construction sector for some time now, and they've been, their prices have been driven down, and we don't believe they deserve to be driven down the way they have. If you look at the headline earnings, as you just mentioned, up 10%, that puts them on a PE of about 6. They still pay a healthy dividend. Their dividend went up a little bit. The most important thing for us was the outlook, and they're not that bearish on the outlook. They're expanding into Africa.
The project pipeline's about 119 billion rand over 5 years.
And the order book, secured order book, is down slightly, as you said, 9.2 from 11.6 billion. But the outlook isn't as bearish as everyone thinks it's going to be. So it gives us a nice look through to the other construction sectors. And a very interesting point about Group 5 is that they've got about 3.1 billion rand cash on the balance sheet. This is a 4 billion rand market cap company. So
3.5 billion rand.
3.1
billion rand cash on balance sheet.
This is very similar to Avenge. Avenge also have about 50% market cap. Wilson Bailey Homes as well. Unfortunately, Wilson Bailey Homes isn't that cheap on the price to book, but these guys are all cash-rich companies.
Do you also have exposure to Avenge?
We do. Avenge and Group 5 are two exposures in that sector.
Greg, I think we've had this construction debate before. Have you found it worthy to buy into the construction stocks, particularly a Group 5 or an Avenge?
No, look, I think that the construction story for the glamour is out of this sector for the time being, and I would still need to see the recovery really taking hold to be convinced to buy construction stocks now. So, yeah, a value investor I would imagine would get in now, but I would rather wait to see that there's a serious uptick in the economy.
The big construction stocks, the like of Murray & Roberts, you stay away from those?
We have. Adrian Sable actually did a presentation there about 2 weeks ago, and he came back and said the mood in the company was dull. It was downbeat, and they're not they're not very bearish on the outlook. So Murray and Roberts, obviously, they are a bit concerned, but the smaller ones, Group 5, we still happy to hold.
Andrew Ditburner, Greg Katzenellenbogen, gentlemen, thank you very much for your time.